A banana stuck on a wall at a Sotheby's auction fetched $6.2 million. Yes, a banana stuck on a white wall with a silver piece of tape fetched an incredible $6.2 million. So what I can learn from that is there is a huge amount of wealth in this world. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today's show, we're going to dig into a component of the wheel of life. We're going to also tackle two of the types of investments I work on inside of modern portfolio theory. So today we're going to dig into trophy real estate and all-weather investments and have a little bit of a chat around where the market is actually at. So welcome back, regulars. You know the drill. Play the program in double speed. Get your life back. All the episodes I've done are lessons on real estate, so feel free to go back in time. And of course, I tell you what, life is a peach at the moment. Things have warmed up in my world. And yes, the Gospodar has finally spoken to me. I'm having some, repairs done on my house, and quite significant repairs where there's basically 5 people repairing my home as we speak. And the Gospodar, the man who just loves looking after his own house, a man who wakes up every day and, can't think of anything better to do than to tend to his home. He is a real hearth and homer. Has given me the nod. He's so appreciative that I'm doing some repairs. So there you go. I finally bonded with a Gospodar by being a Gospodar myself. But that's the latest news with me. But I tell you what, I probably can't help you with your career. I can't help you get a better social life on your wheel of life. I can't really help you with your family. I'm probably the dumbest person whenever I am in a room. Certainly from a physical perspective, I'm no specimen. Spiritually, I don't think I have a spiritual bone in my body. But financially, I was put on this earth to share the gospel of real estate. And today I want to share some of the insights onto how I invest and how I approach real estate in this modern, very modern world. So let's get into it. Let's have a bit of a chat about it. Obviously, if we haven't met before, my name's Sam, and I am involved in multiple real estate businesses across different verticals. I work across the tier 1 luxury real estate space. I do work through one of my businesses with owner-occupiers, and I get to understand what is going on in that world. I get to work with baby boomers buying luxury real estate. I get to work with home buyers looking for a house. But equally, I work in investments, and a large portion of my day is really spent trying to put together assets and effectively make sure investors are on the right side of growth rather than the wrong side. And ultimately, today I even am doing some advisory work for a couple of government jobs, just the certain departments of development of their states, looking at bringing on their own developments. Yes, the Australian governments are now property developers, and I'm even talking to a few government departments about their pipeline, trying to help them understand what they can achieve off the back of bringing some places together for people. But when I teach real estate, I like to teach that, to get the best rate of growth, you want to be able to build a portfolio. And inside of that portfolio, you're going to have different types of assets at work at once. And a lot of those assets can be things like doing your own upgrade strategy on your principal place of residence, buying the right commercial property to put in your portfolio, doing some cash flow strategies, things like Airbnb, doing some other cash flow strategies like doing small scale development, which can accelerate your wealth over a period of the short-term time frame, 1, 2, 3 years. But when it comes to building a portfolio which is a little bit longer in the tooth, then I like to tackle real estate through two concepts. One, which I call all-weather investment, which is really finding dwellings which are going to go the distance of a time horizon. And the other is trophy real estate, really buying real estate, which is the creme de la creme in the marketplace, which is going to certainly provide a rapid rate of growth. Now, the trophy real estate growth rate versus the all-weather investment growth rate, it's different. But for a lot of people, they can't just build trophy assets continuously. So they need a bit of a balance of really that middle tier investment and also that tier one investment strategy. Blended is really the idea of building a portfolio. What would the growth rate be if you had a tier one piece of real estate plus a more middle tier piece of real estate? That's going to accelerate your growth in your portfolio. So today I'll probably focus primarily on markets within markets, and I'll talk a lot about what's going on in Sydney, Melbourne and Brisbane. And the reason I am concentrating on primarily the East Coast and really that Brisbane to Melbourne model is that's where the weight of Australians live, and that is where the weight of properties are in Australia. And really, if you were going to build a portfolio, I think it's really prudent to make sure you're part of the weighted average of Australian real estate by ensuring you own real estate in those prime marketplaces. So let's talk about an investment pathway. And one of those paths is trophy real estate. Trophy real estate. And when you think about trophy real estate, you've got to understand there's a bucket load of money in this world. There's more money than you can poke a stick at. And really finding money is as much about just putting yourself in a position to be part of wealth, and put yourself in a position to win, because there is a absurd amount of money in this world. Now, by way of example, I mean, I think you guys have heard me talk about this before, but a banana stuck on a wall at a Sotheby's auction fetched $6.2 million. Yes, a banana stuck on a white wall with a silver piece of tape fetched a incredible $6.2 million. So what I can learn from that is there is a huge amount of wealth in this world. And if I can find the right piece of real estate, if someone's prepared to spend $6.2 million on a banana, they're prepared to spend $6.2 million on the right real estate in this world. And so it's quite fascinating when you track sales above $10 million, for example, in Sydney. Up to this calendar year, there's been 177 properties sold for over $10 million. In 2024, which is probably a better gauge because the year completed, there was 381 $10 million plus sales. When we look at $20 million plus sales in Sydney, there to date has been $20 million plus sales in Australia. So whilst that sounds like a very small amount, it's an important amount because really gives us an insight into what the ultra wealthy are looking at when they examine real estate. And really, one could argue the ultra wealthy are looking for high-end trophies. When I look at some of the most expensive sales over time in Australia, you've got, for example, 5 Wentworth Place, Point Piper. It sold in 2022 for $130 million. You got 550 New South Head Road, Point Piper, $130 million. Another Point Piper property, $100 million, 560 New South Head Road. Point Piper is responsible for 4 out of the 5 most expensive home sales in Australia to date. And really, when you look at Point Piper, what is it? It's an enclave, it's tightly held, it's a peninsula, it's close to water, it's very green, and the homes and people in the neighborhood are just mega. The peninsula has very good views. It's got a sneaky little beach, and it's close to very social pockets of the city and eastern suburbs. So there's a lot of clues as to why people are paying $130 million and $100 million to live in Point Piper. And really, when it comes to trophy real estate, really what we're trying to do is follow the Point Piper effect. How do we follow the Point Piper effect? What ingredients are in that neighborhood? It's near good schools, it's near good transport, it's got great views, it's got great green space, it's got great blue space. These are the elements of what can make a great investment. And so if I look at some other high-end sales that have recently unfolded, $42 million for a home in Northbridge, waterfront. Mossman, if you're familiar with Mossman, $40 million for 7 Bradley Head Road. Mossman, full of green space. And one of my favorites is Bower Street, Manly, number 44. In May 2025, sold for $34 million. What's so good about Bower Street in Manly? Well, it's arguably in my opinion, the most beautiful pocket of Sydney. If you've ever wanted to understand, does Sydney have a Santorini? Well, it does, and it's called Fairy Bower. So make sure if you're not from Sydney, come and see it. It's absolutely breathtaking. Breathtaking enough that people will pay $34 million to live in and above our version of Santorini. But there's been a lot of big high-end sales. You can go back to where I grew up, Hunters Hill, December 2024, at Pilpard Point in Hunters Hill. Home sold for $26 million in December 2024. So these are big, big, big money. Now, I grew up basically just across the road from Pilpard Point. It's interesting to actually do a bit of a history lesson on that particular land subdivision. In 1975, it was a mobile oil refinery. Yes, it was basically a bomb on water. If you ever wanted to see a bomb on water, Google Pilpard Point, Woolwich, mobile oil company, and you'll see just how terrifying that land was 50 years ago. But this is the most amazing thing. 50 years later, someone's buying a $26 million home on what was land of which an oil refinery or the Mobil Oil Company was basically shipping out oil through Sydney Harbour. So there's a few lessons in that as well. Is sometimes you got to buy the ugly duckling and watch it come good. But there's some examples, real evidence-based examples of trophy real estate selling and trading and making lots of money. One trophy going from one wealthy person to the next wealthy person. For example, Victoria Road, Bellevue Hill, number 96, sold in June 2021 for 30 mil. Resold in late 2024 for $42 million. Sold in 19 days, and the home hadn't had any significant renovation. It was just a $12 million gain over less than sort of 2.5 years. 69 Bulkara Road, Bellevue Hill, sold in 2022, resold April 2025, sold 2022 17.5, resold for $25.5 million. And there's really no shortage of these type of trophy kind of stories of just big uplift. Really, when I look at the ingredients of trophy real estate, there's a couple of key things that stand out. It's that the real estate loves blue space, which is the water, green space, which is parkland, social space, which is things to do, and longevity space. There's an element of wellness in the neighborhood. And so people want to live longer, they want to be social, they want to use our beautiful natural waterways, and they want to use our beautiful green space and parklands. That's what people are paying for when it comes to luxury investments. And it's really no different when it comes to the concept of apartments. Now, apartments are quite often analysed on square metre rates. Barangaroo, you're at 100,000 a metre, Circular Quay, about 100,000 a metre. So what does that actually mean? Well, if you've got 10 metres of land in an apartment or 10 metres of apartment, you're already at $1 million. So you can imagine just how expensive properties become. And our most expensive sale is actually not a house, it's an apartment. It's $140 million for the penthouse at Barangaroo, which sold in 2019. And it's got the most beautiful green, blue space vistas, as well as social space and longevity space. And of course, one which I think is quite amazing myself is a reported sale in Oceana, North Stane, Manly, which is basically right on Manly Beach. What are people paying to live on Manly Beach? Well, I'm glad you asked. They're paying $77,000 a metre to live on Manly Beach. And I tell you what, I live basically in the local government area of Manly, not too far from Manly Beach. I'm pretty happy about that because, again, one of the reasons I live around here and have invested around here is because I understand these trends of the wealth. Trends of the wealth. They want to live forever in a beautiful, beautiful place. So I've been blessed to be involved in a lot of some of the best developments that have ever come to Australia. And one of the buildings which I've made people a lot of money in, to the point where people have made well over $1 million on the asset buying in that complex. If you want to Google it, you're more than welcome to Google it. Google Luxury Development Name Country's Best by Courtney Snowden. It's published on the 26th of September. Upper House in South Brisbane was a deal I was involved in putting together. And it actually just won Best Building in Australia. So check it out. And what it's done for investors who invest in that building has been absolutely life-changing. Some investors well up over $1 million and really didn't have to do a hell of a lot other than just press go. And they got themselves involved in a tier 1 luxury development. And interesting enough, when I put that deal together, it was not, $70,000 a meter. It was actually less than $10,000 a meter. And now, of course, it's a lot more than that, even up to $30,000 a meter for the right apartment. So all these things, all these clues, the world leaves clues. And really all we're trying to do with trophy real estate is follow the clues. Follow the clues. And so one of the biggest clues that is out there is the demographical pathway to growth. And why is it a clue? Well, if you look at Australia's mix inside of society, it is very much a tale of two demographic species. The first one is the baby boomer. The baby boomer is getting old now. They are leaving their 60s and well into their 70s and even into their 80s. And a lot of baby boomers have a lot of money. They bought houses for a can of Coke, and now they're sitting on not $1 million, they're sitting on 10, 15, $20 million. And so baby boomers are really the prime driver of the luxury real estate marketplace. They are the prime driver. And so why do I invest in luxury real estate or tier 1 real estate? I invest in it because the demographical pathway to growth is there. And when it comes to trends behind that real estate, really there is no greater trend than the geographical pathway to growth, which I call the 4 spaces. Really, one of the 4 spaces, as I alluded to, what the wealthy want is they want green space. They want blue space. They want social space. They want longevity space. They're the 4 spaces that are effectively in high demand in Australia. And again, if you can effectively pinpoint where those spaces are, even if you get one of them, you're going to get growth. And so when I put deals together, really what I'm looking for is green space or blue space or longevity space or social space. That's what I'm looking for. That's the ingredient for someone to pay more for the real estate than you. And the demographical pathway is led in that space very much by the baby boomer. But equally, the millennial who's having babies, the other half of demographical change, is at the peak of their career right now, so the peak of their earning capacity. And again, they're looking for the same space. They're looking for the same space. The only difference is the millennial is quite often going a little bit further afield to find that space, which is cool. And of course, if we look at one of the trends that is lining up with the millennials, and I've sort of spoken about this before, it's the Labor's first home buyer policy, which is unleashed on the market. And again, it's starting to hot up if you're a young sort of Gen Z or millennial getting into the market now on a low deposit is going to help push you forward. But it's fair to say 1 million is the new normal in Australian real estate. What does that actually buy you? Well, let's take a look, and you're more than welcome to sort of Google these addresses. You could buy 10 Alfred Street, Frankston for $1,110,000. It just sold for as a 3-bedroom weatherboard cottage in reasonable condition. Frankston, of course, is a blue space suburb in outer Melbourne. You could buy in Flemington, 127 Princes Street, Flemington, 3-bedroom, 1-bath, 0 car, older tin and timber home, effectively a terrace house for $1,130,000. Or you could buy 158 Kelvin Grove Road, Kelvin Grove for effectively $1 million, 3-bedroom, 1-bathroom, 1-car space home. Again, it's a little bit of a compromised looking home. It's on a sloping block. It's a little bit difficult with its future potential, but it's what you get for around $1 million. And of course, Brisbane has cracked the code when it comes to the $1 million apartment, 88 Macquarie Street, apartment 302, selling for over $1 million. And in Sydney, if you want to live in the eastern suburbs of Sydney, well, probably your cheapest option is 6 of 18 Wazzel Street, Matraville, the cheapest suburb in the eastern suburbs. You can get a little townhouse for $1.23 million, 3-bed, 2-bath, 1 car. And, that's what you got to pay to play in this marketplace. Or if you want to see what you can buy on the Gold Coast for, say, $920,000, you could Google 1/63 Walton Street, Southport, and you get sort of half a house. If you want half a house, you can move to Southport. But really, when it comes to an investment pathway, obviously, I was talking about modern portfolio theory and the idea that we want to be able to build wealth. We have the trophy real estate, which makes a lot of sense, but not everyone can afford that. Well, what happens when we drop the price to be in line with that $1 million marketplace? Well, we can look for those types of properties, or we can even go into what I would refer to as a more modern play when you tackle basically newer real estate sub $1 million. And why I look for that real estate? It's really reliable, economical, appreciating dwellings on well-located land. That's what I'm looking for. Looking for growth, reliability, low maintenance, depreciable, and dependable. Looking for cost-effective ownership over time. And I'm looking for advanced design elements. It's what I'm looking for, because I know that that's going to produce growth into the future. I know because really when we analyze the sub $1 million mark, really there is an element of much older homes being the only alternative. So when it comes to really those two models, I think they stand out when it comes to building a portfolio. Now, I've got an example of a property which is really just an example of real estate which has gone up over time and really is that middle tier all-weather investment. In fact, 406 of 53 Wyandra Street, Tenerife, just sold for $1.2 million. It originally was purchased for $546,000 in 2012 and just sold for $1.2 million. We can see the growth rate in the middle tier investment is 6% per annum. It's taken 13 years and circa 5 months to double in value. So that's a 6% annualized growth rate. Now, that doesn't take into consideration the rental return, but that is a typical example of effectively a very reliable, appreciating dwelling on well-located land. Even though as an apartment, Newstead and Tenerife is one of the best locations for land in Brisbane. So of course it went up in value. So really got to, think about the idea of longevity spaces, blue space, green space. That's what society wants at the moment. And if you can get your hands on it, you're going to do pretty well. All right, folks, that's it from me. We'll talk again soon. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.